Welcome to the latest episode of the Construction Insiders podcast, where our host, Jessica Bush, talks with industry experts about new trends, best practices, and how to successfully deliver construction projects in today's market. Whatever your role on a project, we think you'll find these discussions interesting and worth your time.
Thanks, Jason. Okay, well, we are back for the next episode of the Construction Insiders podcast. And this episode, we are going to be talking all about tariffs. We've been talking to clients, potential clients, our internal team members, and everyone seems to want to know what's going on, what to expect, how we got here. There's a million questions, and not too many people know the answers as it relates to our industry. So after having those conversations, we thought maybe that should be our next podcast. So here we are today with our Vice President of Forecasting and Analytics here at Cumming, and we're sitting down with Dan Pomfrett today. We're going to discuss all things tariffs and get to the bottom of it so we know what's going on. So without wasting much time, Dan, let's jump right in. So when did the tariffs begin? How are we where we are right now? Give us some of the background. Okay,
so the tariffs started in late 2017, early 2018, under what they called Section 232 and of the Trade Expansions Act. And really what they were looking at was US imports and exports, and particularly focused on steel and aluminum, and looking at how that was weakening the economy. And the ultimate goal of the tariffs, there's been various reasons that have been given, but really ultimately what they wanted to do was bring back domestic steel and aluminum production to the country. And so there was a first round of tariffs, like I say, in early 2018, resulting in about $360 billion of products from China being affected.
And so we're saying tariffs plural. So how many rounds of tariffs have there been? And is that normal to be phased out like this again? Just
there's been about 4 rounds of tariffs, and since 2017, okay. And depending on which track you're taking, there could be more, there could be less. It's one of those ones that seems to keep bouncing around because every time you open a newspaper or read online, some tariffs are coming in, some tariffs are going away. But one important aspect of this is that it's not just China that's affected by the tariffs; it's also other countries like Mexico, Europe, Canada as well.
Interesting. Okay, because we don't hear much about that in the U.S. press currently.
Yes.
We hear just China, 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 and that's not necessarily the case, you're saying.
Correct, yeah. Okay. Europe has a lot of tariffs, and they're doing retaliatory tariffs as well. Mexico and Canada had steel imports and exports tariffs as well. That's been dropped now, or largely been dropped now, so... but there's a whole tranche of countries that are involved in this.
Interesting. It's not reported as much. And so to get back to the tariffs that we're seeing and how it relates to the construction industry now that we've had some time to kind of see this play out, How is it affecting the construction industry?
Well, it's funny because the first round of tariffs with the steel, steel prices jumped up quite considerably. So there was a real big peak just as the tariffs commenced. But what we found is over time, those tariffs have actually dropped now. And so, steel prices are actually now back at pre-tariff levels. Similar things are now happening for example, with delivery, where we had, we're doing a lot of hospitality work, and a lot of mill work, for example, comes from overseas. And as that's come through, or as the tariffs have come up, we've seen jump in the rise in not just the price of mill work, for example, but also the rise in delivery charges as well. So there's been a lot of on and off effects of it all. But it's one of those ones that it's just going to keep rumbling on. Like I say, you keep hearing about China. That really revolves around trade deficits and all that kind of good stuff. So and at the moment, there's no real end in sight of it. People keep talking about, like I say, things going one way or another, but at the moment it's very difficult to really sort of put a finger on exactly how it's actually going to play out.
Has this helped the construction industry? Has it hindered it? What have you been seeing over kind of this timeline of the tariffs with our industry, and how long did it take to affect the industry?
It was pretty much immediate. As soon as the tariffs get announced, the steel tariffs were more immediate than the tariffs that get announced these days, because the tariffs that get announced more recently, it's very 50-50 whether they actually get into play. If you look at the U.S. steel industry, when the tariffs came out in 2017, the first that year afterwards, the steel industry was reported to have its most profitable year ever in the US. So it does help. It really comes down to whether you're the purchaser, the supplier, or the customer as to how it affects you and which way it affects you.
Okay, because that's what I was going to ask next with the different industries, and if we were, building a high-rise residential building versus being the manufacturer or the worker at the mill, how that affects you and your job. I guess it all kind of just depends where you are in the process.
Yeah, where you are in that chain. At the end of the day, it comes down to sort of a supply and demand. A lot of the tariffs that were issued sort of 2017 and the early days, a lot of those extra costs were actually absorbed by the supplier or the contractors. Nowadays, with those prices coming getting further and further ramped up, that price is actually getting passed to the consumer. So it's, there's still a big supply in the industry, but there's also a big demand as well. Most markets are really, really red hot at the moment, so that's going to continue to be not necessarily be an issue, but it's something that people need to keep in mind, that it's not just the tariffs that's the issue; it's also the supply of the contractors, for example, in the market.
Yes, interesting. And on a personal note, we just did a home renovation ourselves, and seeing that being passed through, and the markups clearly stating the 25% increase in this is a result of X, Y, and Z tariff. And it was interesting to see that come through as a consumer and see these current headline news items affect us at home. Yeah,
because the pricing is getting passed on. And, I'm working with a client at the moment where they're specifically putting in allowances for the escalation the tariffs that come through. And the trouble is that, given the size of those allowances, you could be looking at projects that, bid or bust on them.
So on that note, clients are putting in allowances for these costs. Is it affecting all the way back at design level now? How is that process being affected?
Yeah, so designers particularly are more cognizant, not that they weren't already, but more cognizant of what they're designing, where there could be fluctuations. And that works all the way through down to the contractor and owner. A lot of contractors these days don't take the risk on tariff or price increases, and so that risk is just forever getting passed down the line. And ultimately, at the end of the day, whether you get the contractor or the design team or whoever it is to take that risk, you'll be paying for that risk ultimately in one form or another.
Are clients asking us what we expect? Are they asking us for our input on how to move forward? What are these conversations like with clients, or what should they be like? Are clients forgetting how much this could affect their project, or what are those conversations like? Are there things that people should be asking maybe they aren't asking?
Yeah, I suppose I see sort of two ends of the spectrum, really. I get the clients that are very, very worried about it and load up their project budgets. I'm very, very concerned about it. But I have the other type of clients who are into the spectrum where they don't necessarily see or feel it's going to impact their project that much. At the end of the day, when you look at a project, and if you take any type or any particular aspect of that project, the materials is going to be probably about 40% of the price of whatever it is. And if you don't have a lot of steel, for example, on your project, steel prices going up may not affect you. But I think it's one of those things that the conversations people need to continually have. It needs to be continually monitored. As I mentioned, projects or press releases keep coming out that keep changing things. And therefore, it's always going to go up and down. And the trouble is that when you're going out to the market, depending on how you're going out to the market and when you're going out to the market for bids, that can really affect the pricing, because, one day if you're bidding someone and tariffs have just been announced for steel, and that's going to jump up, for example, compared to another time when there's no word of the tariffs.
Okay, and so in terms of prices, I guess we just continue to watch and see what comes out, and then the projects we just go on from there in terms of pricing and planning. And do you have any idea if you could look into the future when you talk to clients that are worried?
Yeah.
What do you kind of feel it looks like in terms of the prices, and how really concerned should people be at this point?
I mean, I think it's a continual concern. Obviously the tariffs are targeted on specific products and services. They've recently changed the way they look at the tariffs in terms of point of origin of the material compared to when the manufacturing occurs. So I know a lot of clients are looking into different processes and approaches to that. But I think it's something that needs to be continually tracked, because certainly when you're looking at the tariffs and the cost of materials and pricing, like I say, a lot of contractors, a lot of members in that overall project will not take the risk on for the tariffs or price increases. So it's one of the things that's got to be continually tracked. I don't think it's just do it during the design phase or just do it during the bid phase, because you find the contracts have these clauses that allow price increases to happen.
Okay. So, getting early, kind of doing your due diligence then, but we hear about cost increases in general. Mm-hmm. So are these tariffs to blame for all of this change within the construction market? We are also talking a lot internally here about labor daily. Yep. Is it all tariffs? Is it a combination, a bad combination? What else is going on?
I mean, you get different people with different viewpoints. I mean, my viewpoint really is that the tariffs is whilst important, it's not the main driver of price increases. A lot of it is down to labour and availability, and going back to that supply and demand. Construction volume, as if you look at the whole US, is actually back up way past where it was before the downturn. However, construction labour is still, I think last figures I saw, about 200,000 people in the industry less still than in 2008. So there's still an issue in terms of finding the labour to do the projects, particularly in the end trades like electricians, drywallers, decorators, people like that. So I think, I wouldn't say it's a perfect storm, but it's those two areas sort of culminating with actually going through an increase in the pricing. So, but you have, red hot markets like the San Francisco market, and then you have other markets that are cooling down. So it's certainly an interesting time in terms of tracking the pricing, because it really does change, and pretty much wherever you are, there's all these micro economies that will change the pricing as well.
So as we are a third party, we come in, we are not the general contractor. We have our own systems. We are here for the client to advocate, to make sure that this entire project is as seamless as possible. We get it on budget and on time and all these different factors to really oversee the project as a whole. Is there more of a need for people like us, less of a need? How do we bring a different set of values to a project in this sort of scenario? Yeah. Is there more or less collaboration needed among parties? How does that kind of play out now?
We're seeing very much a turn in the market, particularly over the last sort of 18 months, 2 years, 3 years, where people are now employing third-party estimators and project managers to come into their projects. A lot of people now are very conscious of cost. I think a lot of that is to do with the downturn, and people were caught out by that, and so people are very sort of wary that they don't want that to happen again. As you mentioned, we're independent, we don't have skin in the game, so to speak, and we're given our unbiased view. So we're really an advocate for the project, an advocate for the clients. We're not there to change things up or to have cost drive design, but really help people make informed decisions, and that goes across every team member, from the owner to the architect to the contractor as well. So we're really there to help bring value to that project and help make sure that it really achieves its objectives at the end of the day.
It's interesting because people a lot of times are surprised that we have someone like you, a part of our team, that really is looking to the future while looking at what's currently happening in the market to really provide a holistic view as to what's going on. Because when we are dealing with these multi-million-dollar projects, a little shift somewhere in that affects it majorly at the end of the day. And so to see just those little changes, those little ticks, it's been really interesting to have you and be able to speak with you on kind of tracking those and seeing how they really affect the smallest change on a project, the end game, when it's all finalized. Yeah,
because the way I look at it is that you have basically both direct and indirect effects of a project or costs. Just because gas prices go up, for example, doesn't necessarily mean that prices on our project are going to go up. But, if we've got a project that's funded by someone who's in the gas industry, then that could affect you indirectly. So, it's one of the things that we need to continuously track. For us as a company, we create our own unit prices, we create our own data, we use our own databases and information. And, so we need to be accurate and continue to track that. And by being that active in the market in terms of knowledge expertise, that's how we make sure that we're really on the top of our game and providing that accuracy to the project.
That's interesting. And in just last episode, we sat down with Pete Malucci and talked about the published metrics on the MEP side and how important that was to have everyone moving towards a standardized set of metrics. And then on the other side of it, in-house, we're tracking these changes. We're tracking the market to really give, again, that full perspective, that knowledge, that expertise to our clients for things like this, because we just don't know what's going to happen day to day, but we can use everything we have in-house to get us as close to that prediction and forecast as close as we can.
Absolutely. And if everyone could have predicted the crash in 2009, then we'd all probably be rich. But at the end of the day, it's very difficult to track that and to estimate when those kind of things are going to happen. But what we bring is that aspect of being able to sit there and go, okay, this is happening, or we think this is going to happen. How do we protect the project against that? How do we protect our clients against that? And how do we move forward in a way that is more of a calculated risk rather than an unknown risk? Calculated,
that's key.
Yes.
Calculated risk, yes. Okay. Well, awesome. So, before we finish up, where do you kind of see this going? And if you were to look towards, we go into 2020, how do you see that playing out? Anything else people should be aware of or kind of maybe have in the back of their mind for their next meeting?
I think the labour issue is going to still be there, and the supply and demand there on the contracting side. So that's going to be a continual issue, particularly in places like San Francisco. What is interesting to track at the moment is the migration of people from the higher taxed states into the lower tax states, generally in the southern, like Texas and locations like that, for example, that are actually drawing labour away. But, I think 2020 is going to be a little bit more of the same. There's going to be uncertainty out there. There's going to be still that continuing conversation with China, so we say, that will keep bouncing around.
And I was going to ask, 2020 with the tariffs, I mean, is that still just going to be something we have to watch and figure out how to make next steps?
I think that was. I think the one that, as you mentioned, has sort of gone under the radar a little bit is the European one. That's a big market that we're currently having tariff conversations with, shall we say, and there's been retaliatory tariffs there as well. The China one everyone knows about, but it's the European one that is the sort of probably more interesting one because, like I say, it's lesser known. It's already affected things like the aviation market and other sectors like that.
And I was going to ask, with being lesser of a headline news story over here, what are you seeing with that? And we have a lot of clients over there. We work with a lot of companies based over there. They're doing projects here. How is that going to play out, do you think?
And again, you have things like Brexit that come up every day,
which is always
fun. Then you've got various economies as well that are on the brink of a recession again. Like Italy, for example. Then you've got some other locations that are not doing so well, and then some other states that or countries that are really prospering. So it's a bit of a mixed bag in Europe. So how that will play out will be interesting. I mean, you take, for example, even just looking at on the political front, Spain has had its fourth election, I think, in 4 years, and so there's a lot of that is revolving around that can affect things. And again, it's difficult to know how that's going to really affect the US, but it's certainly something that needs to be tracked and understood because, like you say, we have a lot of clients out there. A lot of products, for example, come out of Europe as well. So understanding how that works and how that will be supplied to the US will be interesting to track and understand as we go into the 2020.
For sure, it is all very interesting and ever changing. So, well, awesome. Was there anything else that you wanted to bring up that we should keep our eyes on, or are we just gonna hope to get through 2020 as unscathed as possible?
Yeah, I mean, I think just one further point to add is, like I mentioned before, we have these sort of micro economies, so just to be aware of those and understand those, because again, they can. What's happening in one city 20 miles away from another city could be vastly different. So just be aware and understand of those, I think. And again, I think they're going to come into play more now with the bigger cities starting to level out. in 2020. So we're going to see a lot more expansion in these, I wouldn't say smaller, but these secondary
markets.
Secondary markets, yeah.
Well, wonderful. Well, thank you for joining us today, Dan, and I'm sure we're going to have you back to discuss some of your market information as we move through the next quarter. So thank you. And
thank you very much.
I appreciate it.
Thank you.
If you enjoyed this episode of Construction Insiders, we encourage you to check out our website at www.ccorpusa.com. That's ccorpusa.com, where you can find our full knowledge library under the Insights tab. It's all great stuff, we're really passionate about it, and we hope you'll check it out. Thanks for listening.